Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Richard Raizes of Plutus21. Richard, thank you for joining us.
Good to be here. Thanks for having me.
Great. So what was your background before investing in early stage companies?
So before investing in early stage companies, I got a finance degree from SMU in Dallas, Texas. And then I worked in investment banking and corporate banking for about 5 years. Worked in a variety of sectors, most recently oil and gas and commodities. But I was always looking at niche assets, alternative assets, and always interested in technology, coming from a family background in technology. So with the experience of analyzing companies, underwriting a lot of different deals over that course of time, that's what I bring to looking at blockchain investments.
Well, great. So what excites you right now?
So right now, what I'm most excited about is the opportunity to invest in promising early stage startups while maintaining liquidity. And that's in the form of digital assets on the blockchain. As recently as 2 years ago, there was the ICO boom, 2017. And that allowed investors to invest in these companies when they were in the early stage of getting adoption, rather than having to be a venture capitalist with connections to invest in something that wouldn't go public for 10 years. Now we can invest in these early stage companies that are quickly growing. And there's been some very promising opportunities in the space.
Well, great. So for the investors out there, what's your advice for them about investing in the blockchain sector?
So one of the most important things is to try and differentiate between speculation and actual adoption. And in this space, I would say 95% of the assets are highly, highly speculative. There's really no fundamental backing their valuations. And if you can instead focus on measuring adoption, whether it's growth in users or profitability and cash flows, or just the number of developers and applications that are being built on a particular blockchain, wherever there's that adoption, that's increasing over time. And if you can form a thesis about why it will continue to increase as the technology goes mainstream, those are where the best opportunities lie.
Great. And then for the startups that are joining into the blockchain world and starting to build their first blockchain company, what would be your advice for them?
So my biggest piece of advice is to take action and build a prototype as quickly as possible. There's a lot of startups that they go around with their ideas. They make pitch decks. I see them all the time. And there's a big lag before ever getting to a product. So just building a product and putting it out there and then iterating on it as quickly as possible, getting a couple of power users, getting their feedback, and building something that people want to use. That's the best way to create long-term value and a sustainable business.
Well, great. That's good advice. And so when we look at the world of blockchain, it's ever-changing industry, moving very fast. How do you see the industry evolving today in blockchain?
Right. So if you look at the history of blockchain, it's only about 10 years old. And it started with Bitcoin, and it's used as with illicit transactions on the dark web. The last few years, it's evolved from illicit transactions to speculation. And right now we're on kind of the tipping point. We're about to go from the speculation phase to the adoption phase. And basically all the infrastructure is being built over the last 2 years, while the space has been in a bit of a bear market. But we have institutions like the New York Stock Exchange, Facebook, and other large companies that are integrating blockchain and are going to bring applications that will actually bring mainstream adoption.
That's great. So what's the biggest change you've seen in the last 6 months that has maybe surprised you about blockchain?
I would say the biggest change is regulatory and government awareness. This year, we've seen U.S. officials ranging from the President of the United States to the head of the Federal Reserve acknowledging blockchain, digital currencies, the potential for Facebook to come in with a with their digital currency called Libra to bring something that could be very disruptive to the status quo to market. So there's a lot of attention, there's a lot of regulatory developments. Some of them are good, some of them are bad, but most importantly, we're finally getting clarity, and clarity allows businesses and startups to move forward, know what the rules are, and build useful products.
Well, that's great. So what is your investment thesis for the blockchain world for your fund?
So my investment thesis is basically to invest in the picks and shovels of the space. If you're familiar with the California gold rush, the idea is that if you can sell the picks and shovels to the speculators, you can have a solid business model and make money, even if the people that are looking for gold don't find gold. Some will and some won't. And what we try and do is we focus on the infrastructure of blockchain. We focus on the things that will grow as blockchain gets adopted without betting on the success of an individual application. And to put that into context, there's a few buckets that we think fit this picks and shovels theme. One of those buckets is the smart contract platforms. You can think of a smart contract platform kind of like an app store on your phone. If you were to have been invested in, say, the Apple App Store, it didn't matter which app became successful. There's hundreds of thousands of apps that were developed, and only 15 or so are used by most people on a daily basis or weekly basis. But the App Store takes a small fee on every transaction for all the apps that it supports. And blockchain infrastructure acts the same way. Another theme in the picks and shovels would be exchanges. So crypto or digital asset exchanges, they take a small fee on every transaction where people are buying and selling these digital assets, regardless of whether the price goes up or down. The exchanges can be highly profitable investments and benefit from the speculation and also the adoption over time of blockchain.
So if you had to pick one or two startups that fit that thesis, who would you call out and why would you invest in them?
So one of the investments we're public about is Binance Coin. And this is not investment advice, it's my own viewpoint on it. But we're invested in Binance Coin because it's tied to what's become the world's fastest growing and most profitable startup in history, as far as I know. It's Binance.com. They are a 2-year-old startup that has profits of about $400 to $500 million a year. They have 15 plus million users. And in 2 years, they've gone from startup to number one exchange in the world. And this particular digital asset that they issued called Binance Coin is basically an ecosystem asset. It is used on the platform by users to get discounts on the products within Binance, but it's also an asset that's been valued based on cash flows and profitability because the company takes 20% of their profits and uses that to destroy the asset permanently. So it's one of the few assets where supply decreases over time, but demand increases organically as more people come into the space. And it's been a good investment for us.
Yeah, so that's a good one. It's a good company. What else would you call out?
And then going back to the App Store example, we think that Ethereum, which is the world's leading smart contract platform, is well positioned based on the adoption metrics that we've been following. We're just now seeing for the first time applications built on Ethereum that can go mainstream. There's one in particular called Dharma, and it's essentially it's a bank account that allows anybody in the world to save. But instead of it being a bank, it's just a program that automates what a bank does. Right now, you can save US dollars in their digital form called the US dollar coin on Dharma and earn something around 5% interest. And there's no bank, there's no branches. It's just a program. That's essentially an app on the App Store. It's built on Ethereum and it requires Ethereum to run, which makes Ethereum more valuable. And as we see more and more applications that have mainstream adoption potential being built on Ethereum, we believe that will benefit Ethereum as an asset.
Well, great. So what are the current challenges in the space for the startup building a blockchain application, either regulatory or market or technical or otherwise?
So on the regulatory front, at least in the United States, we do have quite a bit of regulatory clarity. especially around the issuing of digital assets. If a digital asset is issued as a security, then it makes it very difficult to use that same asset to incentivize users. And also it makes it difficult to make that asset freely traded if strictly following the rules. So we need more regulatory clarity. We need basically some kind of fintech sandbox policy that allows people to experiment, because these assets can be equities, commodities, they can be utility coins, they can be a lot of different things all in one asset. And that's leading to very interesting business models. But so I would say regulatory clarity, one. And then number two is that blockchain as a technology is pretty immature at the moment. It's kind of like the internet in like the late 1990s. We have blockchains that do not scale to become mainstream. They're too slow. They have technical limitations. And right now there's hundreds, if not thousands of developers working to make this technology fast, scalable, while also maintaining security. And this is a problem I believe will be solved, but it hasn't been solved yet. And if blockchains can scale for the world, then we can build the next layer of the internet that takes advantage of what blockchain can do, which is basically democratize value, let everybody in the world transact with each other with money and digital assets in a way that you can't do in the current system.
So you see quite a number of applications and subsectors in the blockchain space. If you have to pick out one or two that you think are particularly ripe for pursuit today as great opportunities for the investor, which one or two would you select?
So the first sector I would just call open finance. It's the idea that as the world is going digital, eventually the entire world's financial infrastructure will be built on one open, decentralized blockchain system. And you'll be able to create these financial protocols that are kind of like money Legos. You can fit one protocol for borrowing and lending, another protocol for money, another protocol for exchanges, and you can kind of piece them together to create interoperable products. And the end result is that everybody in the world, anytime, should be able to transact with anyone, anywhere, as long as they have an internet connection. I think that's a compelling idea and one that will play out over the next 5, 10, maybe even 20 years. The other category that I'm very excited about is actually video games on the blockchain. Now, video games have the perfect demographic overlap with early blockchain adopters. It's usually young, male, technology literate people that were early adopters of cryptocurrencies and also play video games. When you put video games on the blockchain, you can allow players to actually own their items and characters. And you can actually connect video games together and share those items and characters, have them become interoperable, and let the player take their assets from one game to another seamlessly. I think this will flip the video game industry over time. And so a picks and shovels play in this space would be to get in on those platforms that are making the common infrastructure that will connect video games together. It's kind of like the movie Ready Player One. I think that's the best example of what could actually become the future of video games.
Well, that was a great example of what is to come, I thought as well. But in the last few minutes that we have here, what else should we cover that we haven't?
I'd be curious what your biggest objection that you've heard of as far as investing in blockchain is, and maybe I can help with it.
I'd say the biggest objection so far is the lack of revenue generating applications that are out there. It's still an early stage technology. If you can think of the internet back in coming into play in the early 90s, the dot-com boom of the late 1990s, so many companies went under just because the infrastructure wasn't there to support the applications they were putting up. And where we are today is really not that different. The point applications people want to put up require just a lot more infrastructure than is available. So we go back to wallets and exchanges and the basic infrastructure that is there. And those are good opportunities. But these high-end applications that promise the moon, I've rarely seen a blockchain deck that did not promise the moon. But anyway, the infrastructure is not there for it. How would you address that one?
Right. So I would say you're right that it's definitely early stage. The way that I think about it is if you measure adoption over time, there will be new business models created that essentially allow users and investors to become better aligned than in the current system. And instead of thinking about it as a business has to have a cash flow stream and profits, you could actually think about it as a community that works together to create a product where there's some kind of economic link on a digital asset that connects everybody and incentivizes everybody to behave correctly and create a network effect. Like, for example, one of the ideas, it's a little bit far out, but it's the idea of creating a social network that rather than having a company, such as Facebook selling our data to advertisers, maybe there's a common digital asset that can connect all of the users and can be exchanged by them. And if more users grow on the platform, it sort of incentivizes everybody to build out the platform and maybe flips the incentives so that the platform does what's best for the users rather than what's best for the company or the advertisers. And I think that this idea of aligning incentives will create these new business models. You can still have a profitable company, but a lot of the excess profits, instead of platforms taking 30%, for example, maybe they take 5% and they can still have a sustainable business model to grow the ecosystem.
Well, that's a good point. And looking forward to seeing those infrastructures and applications come into place to deliver that opportunity. Sounds like a great one. In our closing moments, I guess the last question I have is how best for listeners to get back in touch with you.
So I'm on Twitter at Richard Raizes. And you could also find me on our website, Plutus21. That's Plutus21.com.
Great. We'll put those in the show notes. Appreciate you taking time to talk with us today and hope to have you back for a follow-up soon.
Thank you, Hall. Great being here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.